Hello everyone, how's it going? In this video, we will talk about Mullen, trading under the ticker symbol MULN. Mullen has been a very interesting company to trade recently, with high volatilities and also many projects that may fuel future speculations. At the same time, it's a company that the market tends to not trust too much with the capital, especially when it comes to long-term investment. So, in today's video, we will go through the latest fundamentals, the price actions, and my analysis, as well as recommendation to hopefully see what is the best course of action to carry out regarding Mullen. If you appreciate my content, please consider to drop a like, comment, and subscribe to my channel. Also, please check out the links in the description, as every help is greatly appreciated. During Wednesday's trading session, Mullen's stock price actually increased by 16% compared to the previous close, and then closed today's session at 26 cents. This is a very cold comfort for a company whose stock has dipped beyond recognition over the past few weeks and even within the past 5 days, because just in a matter of 5 trading days, Mullen lost close to 50% of its equity value on the Nasdaq. Recently, Mullen issued a letter trying to firefight the sentiment from the shareholders, which is really reaching a boiling point, with the traders feeling not very, proud and also disappointed by the lackluster performance in the stock market, but also betrayed by the company's upper management regarding Mullen's real situation, especially the cash flow management and also the lack of significant profitability results. This letter didn't say much beyond the company's opinion that the shares are currently trading below their book value, and they don't really mean much, regarding what the stock market is all about, because we don't really care about the book value when push comes to shove, because whatever that is, the trading cost reflects what the market sentiment currently is. Granted, if the market sentiment shifts, we can always come back and be like, oh yeah, we were all wrong, look at this article. They were so right about the fact that we could have 10x if we just held, except it may also just not happen. It may also never happen. So this is why we have to be really careful about this kind of letter. It really sounds desperate at the current moment. So let's also take a look at the other technicals. The trading volume of Mullen recently reached around 400 million shares versus the average volume of 78 million shares. Over the past 52 weeks, the price fluctuated between 20 cents and $42.75. The volume of shares traded tells us how many shares are being bought and sold at any given time in the market, and if there's enough liquidity to support a trading strategy. If the float is very thin, it can be very easy to manipulate the stock price, but also it could be difficult to exit. So when we compare the current volume against the average volume, there might be the possibility that shows that there is a trend reversal or a breakthrough if the difference is very large. For example, right now we're seeing 400 million shares. This is something that I would qualify as, a breakthrough or a reversal type of volume. That being said, we really have to see what's going to happen over the next few days in order to assert this point of view. The market cap of Mullen is around $75 million compared to the EV of $48 million. As we compare the current price to the historical price fluctuations, it is 30% higher than the 1-month low, 30% higher than the 3-month low, and 30% higher than the 52-week low. On the options market, which often gives us a hint about what the sentiment is, currently the implied volatility is 400% versus a historical volatility of 152%. The put-call ratio is currently 0.3, which is normal for most stocks to tend to have a higher put option volume. In other words, there are way more call options, which is understandable given how low the stock has been and the lack of significant space for further pushing down, whereas going up, well, sky's the limit. At least that's the theory. The most recent volume of options traded has been 65,000 contracts in a day versus the 30-day average of 37,000. Regarding the open interest, the recent volume of open interest has been 1.1 million contracts versus the 30-day average of 1.1 million contracts as well. Regarding the shareholder structure, they're currently holding, the institutional shareholders are holding almost 150% of it, which is likely a result of short selling. The biggest shareholders include Vanguard, BlackRock, and iShares. So it's always good to see some institutional participation, but in this case, I actually believe that it's not because they believe in the fundamentals of Mullen, it's mostly because they may in this as the counterparties of short selling. This is possible, or they may be shorting Mullen themselves. I think this is the plain reality when it comes to what the current situation is with Mullen. It's a short-term speculative position that people have accepted as such. So this is why a lot of people are willing to take risks that they normally don't take with a company with such poor fundamentals. So the current interest with shorting is around 17% of the float, 60% of which come out of the dark pools. Typically, if the short interest is above 15%, we may have a significant chance for a short squeeze. Now, those kinds of movements are always possible, but I would say that for the time being, if they were to happen, they were to happen out of a freak movement. They don't really, I wouldn't say that anyone who's rational would start saying, well, Mullen deserves a big thumbs up, right? This is just, I don't think that this is going to fly very far. Mullen is a publicly traded company operating in the EV sector and is listed on the NASDAQ. One of the key factors that sets Mullen apart is its focus on developing long-range electric vehicles. The company's flagship project, I was going to say product, but it's really project, is the M115, is a long-range electric truck with a range of around 500 miles. This is significantly more than the range of most other EV companies currently on the market, making it an attractive option for commercial fleets and logistics companies. Another differentiator is that it focuses on heavy-duty electric vehicles. They have a line of buses and trucks which are designed to handle heavy loads and perform demanding work. This is a unique offering in the EV market, where most other companies are focused on developing cars and light-duty vehicles. The company invests in battery technology as well, as they developed a somewhat proprietary battery management system, helping companies to have longer range and faster charging time. In terms of financial performance, though, the company has been having a hard time generating income, as they don't have any significant revenue streams before the distribution contract in Europe for the iGo vehicles. These vehicles should generate some income and should be reflected in the 2023 financial reports. In terms of the long-term price actions, despite the recent upward momentums, the company has been having a mostly bearish trend over the past 5 years, having traded between $5 to $10 for years before coming back to the current levels. What this means is that Mullen has been hard hit by the ongoing stock market downfall, and a lot of people have realized that at the end of the day, some companies are just empty shells, or that they have very weak fundamentals. Now, for a company like this, I would say that a lot of investors wouldn't trust it with long-term capital investment, but they may still come back for some quick swings. So I also want to say that things can always change in the industry, so it's not because nowadays it's not worth investing in Mullen or that you shouldn't invest in Mullen, but this will still be the case for a few years down the road. The online communities have been initially skeptical about Mullen regarding its capacity to survive beyond the medium term, if there is no more EV hype to fuel its stock price and to provide liquidity. The general mood has since then transformed into the high speaker of whatever the company announces. Of course, nowadays people are a bit smarter than this, and I would say that whatever happens with Mullen in real terms would become a reason to like or to hate it. Now, basically, as far as their online footprint is concerned, the biggest factor is the price action, and this will give people enough motivation or not to have a position in Mullen. Other factors have sometimes served as a pretext to buy its shares, such as the ongoing IGO distribution or the potential, major clients and so on. On top of that, the macroeconomic trend within the sector have been under serious pressure due to several reasons, including the increase of the interest rates, the capital flight from growth stocks to other options, the conflicts around the world, the supply chain issues, the expectation of a recession. Another factor to look at is how the flagship company of the sector, Tesla, has been doing. The EV sector is a relatively new industry, with much of it still in development. Very often, people determine whether they should purchase EV stocks based on whether Tesla is performing strongly. The idea is to profit from a sector-wide gravy train pulled by Tesla with all the other ones behind it. Of course, Mullen doesn't always follow this trend because it's not really a fully fledged EV company. A lot of people simply perceive it as a hustling EV shell. As this has played in its favor before, it is also the reason why some people believe that it's only good for trading and not really for investing. With that being said, let's also take a look at the company's financials. The company's cash balance has decreased somewhat, but for now, it is not a major issue as the reserves remain at a decent level. The reason why cash balance is relevant to examine is because cash is used not only to finance the operations, but to satisfy short-term obligations. Without it, the company would technically go into bankruptcy, with a possibility of liquidation. So to prop up the cash positions, the company has to bring money by either issuing debt, selling the equity, or to raise capital by selling assets. The liabilities of Mullen has provided some encouragement, as it recently reduced the liabilities by $13 million in an announcement, but it didn't really have the effect it wished that it's gonna have, because during the same period of time, the stock price fell from 55 cents to below 30. The price movement shows that, although it is a good news, it didn't really carry much weight in front of purely stock-related factors. Despite the price action downturn, I believe that it is encouraging to see the liabilities going down as it decreases the solvency risks and reduces an amount of cash outflows by contract. The last element to look at would be the profitability. It's very simple. They don't have any profitability as of yet because all they have seems to be expenses. They should have some money coming in with the IGO distribution, but even then, we will have to wait and see whether this is going to be the case in the financial reporting. Overall, the financials show us that the company wants to stay afloat. This is its intention. But can it really do that is something that is not always up to itself. It's also up to the shareholders. Now, regarding the shareholders, they're mostly retail, with some significant institutional shareholders like BlackRock, and their number for a period of time has been increasing, but I don't believe that this is significant enough for me to change my view that Mullen is mostly for trading and short-term trading at that. Now, at the same time, the lack of significant institutional participation also means that there is very little trust from the institutional side because they don't believe that this company really means business. They might only be here to hustle around with equity money. One key behavioral difference between institutional and retail shareholders is the investment outlook. They can afford to wait longer, and they also participate more actively in the company's operations. These are the key differences between the shareholders coming from the institutional side and the retails. Speaking of the retail shareholders, the actual catalyst for Mullen is the significant size of short positions. The reason why it is relevant is because it may trigger what we call a short squeeze. So currently there are around 40 million shares been shorted against Mullen, the vast majority of them outside of public exchanges. So therefore we can say that they come from the institutional side. And the potential for a short squeeze is also significant in that sense because this is a phenomenon observed when traders decide to collectively buy up the price and force those who have the short positions to redeem their positions, essentially buying back their shares. The reason why they may have to do this is because the positions are borrowed from brokers, and the longer it drags on, the more financial fees they would have to pay, while risking infinite losses. The redemption acts as a purchase in the open market, which may push the stock price even higher. Now, it's important to note that the short interest is not a guarantee on the short squeeze, but nevertheless, it can be a significant metric to look at as far as finding what is the reason why people are interested in buying a specific stock when fundamentally things aren't necessarily looking good. It's also worth considering that the short sellers may have valid reasons for their bearish sentiment to begin with. My recommendation is to stand on the side for Mullen at the moment and to see if there are any contrarian movements appearing over the next few days. Those kinds of movements are always possible, but it's really difficult to pinpoint where they may happen. After all, we gotta keep in mind that Mullen is a short-term position and we should definitely tread carefully. I would recommend to commit between 0.5 to 1% of your portfolio eventually. For the time being, it's much smarter to just wait. Wait for the prices to stabilize themselves and also wait for the momentum to hopefully change. I wouldn't recommend to purchase Mullen as is, but it's definitely a stock that's worth keeping on your short list. I would also recommend to split the allocation in batches of 20% at a time over 3 to 6 months, so that you may purchase more in case it retraces.